TCNS Clothing launched its first brand W back in FY 2002 and has come a long way since. Its revenue grew almost tenfold in 7 years to reach about 1,150 crores in FY 20. It now has 4 brands and sells through multiple distribution channels, which is company stores, large format stores, multi-brand stores, as well as through the online route. With business conditions normalizing, TCNS is rapidly scaling up its business network to strengthen presence in the women ethnic category, which is the largest one in the women apparel space. Also, it's taking the company to the next level by moving beyond apparels to new fashion segments, the likes of footwear and cosmetics, which are key growth triggers and would drive re-rating. TCNS has strong balance sheet and return ratios, and margin improvement initiatives would further strengthen its position. TCNS is amongst the quality stocks to be owned in the fashion space. It sells its products through a host of channels. Large format stores and exclusive business outlets are the largest, contributing at 40 and 38% respectively. Among the brands, W and Aurelia are the leaders, contributing 53 and 40% respectively. TCNS plans to accelerate its CBO network under Project Rise and Project Bharat. Project Rise would be in the urban metros as well as Tier 2 and 3 cities, and the company aims to open larger stores of about 2,000 square feet on an average, which is more than double the size of its existing stores as it expands its product offerings. Under Project Bharat, the company would tap the rural hinterlands and open stores under the franchisee route. TCNS aims to open more than 25 to 30 stores per quarter over the medium term. Its current store count as of December 21 was 575 stores. Apart from the EBO network, it plans to augment presence in the LFS space. TCNS aims to increase the door presence in these LFS by 300 doors every year. It has a current door count of about 2,200. It is present in leading LFS, whether it's Reliance Trends, Lifestyle, Pantaloons, Central and Shoppers Stop, and its LFS segment growth would be largely in line with the network expansion of these players. TCNS is scaling up 11 business, which it launched just before the outbreak of COVID-19. It has launched 11 in 8 EBO and over 40 LFS stores and would enhance presence further. Also, TCNS plans to ramp up the recently forayed footwear business. Footwear business was launched in about 150 EBOs and has received encouraging response, contributing a high single digit of the store sales already. Also, TCNS wants to foray into the cosmetics segment and is currently piloting the project. It's gauging the customer response and aims to establish the full product range over the summer, post which there will be a faster ramp up. On an overall basis, TCNS aims for revenues between 75 to 100 crores from each of the new businesses over the next 6 to 8 quarters, which would be a significant growth lever. Its operating margins are expected to improve as the business gains scale. Margins improved to 19.2% in Q3 FY22, which was the first quarter of minimal restrictions post-COVID-19. With COVID receding in India, business conditions have normalized, and with TCNS's robust network expansion, we expect the company to get benefits of scale, which would be a key profitability driver. It's also focusing on increasing the share of full price sales by introducing fresh products, lowering overall discounting by transferring slow-moving inventory to stores where they are expected to be sold faster. Also, TCNS is enhancing the share of its own website sales in the overall online channel, which would aid profitability improvement. We expect TCNS margins to improve by about 450 basis points from the levels witnessed in FY20. TCNS is among the few apparel players with a robust balance sheet and zero debt. Furthermore, it has cash and cash equivalents worth 170 crores as of September 21. TCNS has healthy return ratios in the excess of 20% during the pre-COVID year of FY19, and with expected margin improvement, we expect return ratios to move closer to 20% levels by FY24. TCNS aims to reduce the working capital primarily through reduction in inventory days. On the procurement side, it aims to design and order products closer to the season so as to optimize the purchases. It would also use online monitoring systems to identify the better selling styles as well as do express replenishment so as to optimize the inventory. Furthermore, TCS has consolidated its warehouses from 4 earlier to 1 now, which would also reduce the transit inventory. The company aims to bring down the working capital from about 120 days in FY20 to about 100 days over the next 3-4 years, which would be instrumental in improving the return ratios. At the current market price, stock is trading at a PE of about 31 times and EV to EBITDA of 13 times its projected FY24 earnings. The stock is close to pre-COVID levels witnessed in November 2019.